What's up, everyone? Welcome to today's daily market recap. In today's episode, I'm going to break down all of my trades from the morning, but it won't take long because there was only one stock I traded and I only took 2 trades. So here's the deal. When I was sitting down looking at the scanners this morning about 6:45, there was something I saw that caused me to kind of hold back. 7, 7:30, 8, 8:39. There were some stocks with news, but still I wasn't quite sure. So I waited patiently until finally I saw one stock pulling away. Now, although I got myself into the green, today was actually one of the slowest days of the year. So let me just say something on the record. I'm gonna pause the music because I want you to listen and I want you to listen good. I'm not wearing red, and this outfit can't be interpreted as such in any way. One of you guys yesterday commented that I was wearing an orange sweatshirt, and orange is really just red with a little yellow mixed in. So today I decided to come to the table wearing the only 2 respectable primary colors, which are blue and yellow. Blue and yellow, mix them together, what do they make? Green, and I'm sitting in the green here today. Let's jump onto the screen share and start breaking down these trades. GV, the one stock I trade today, Canadian company. That's a little unusual. We don't usually see big momentum from Canadian stocks. A lot of Canadian stocks in the past have been cannabis companies, and they don't usually trade very nicely. But GV popped up this morning and gave us a pretty nice move. But let's go back to 7:30 in the morning. So 7:30 a.m. Eastern Standard Time, or well, 6:30, I was sitting down looking at the scanners, and although we had some stocks moving, they were lower priced. And that's one of my big issues. So someone was asking me, Russ, I don't really get why you don't like trading low price stocks. Now, if we look at my metrics, what you'll see, and we could look at any period of time, we could look at just the last 30 days, or we could look at the last, all time. But what you would find based on price and volume is that when I trade low price stocks, even though I trade them fairly often, I don't make a lot of money. And one of the issues that I have is that it's not common for me to be able to buy a low price stock at like $1.50 and get 25, 30, or 40 cents a share on it. Typically, the cents per share that I make on a lower price stock is like 2, 3, 4, 5 cents. And the issue with that is that even if I buy 50,000 shares, a percentage of all of those trades is going to fees and commissions. So because I'm trading with a broker where my orders go directly to the market instead of going through payment for order flow, when you go through payment for order flow, you can get a little bit of a rebate. The broker gets a rebate, you get a little bit of a rebate. It's called price improvement. When you direct to the market, you pay the fee to the exchange. So the wholesaler, when they don't send your order to the market, they don't have to pay the fee that the market charges. So instead of that fee, they actually make profit off of your order flow, and they share some of that profit with the broker and some of it with you. But when you send your orders straight to the market, you pay a fee. And that fee is priced at a per share rate. So it doesn't matter if it doesn't matter how many orders you take. You could take 1 order, you could take 1,000 orders. It's not a per trade fee, it's a per share fee. And there's nothing you can do about that because that's the rate the exchange charges. So if you do 10,000 shares, the current fee by the exchanges is $30. That's a $30 fee on 10,000 shares. So if I wanted to buy 100,000 shares of a penny stock, it's going to cost me $300 to buy and another $300 to sell, because every time you trade those shares, whether it's buying or selling, you pay the fee. So that'd be $600 in fees and commissions. Now, if I traded 100,000 shares and I made 1 cent, I'd be up $1,000. But wait a second, 600 of that is fees and commissions. So now, even if I make 2 cents, a third of it is going to fees and commissions. If I make 3 cents, 25% of it's going to fees and commissions. So now you need to start making at least 5 cents, if not more. Otherwise, you're just spending percentage-wise a lot of your profit on the fees and commissions. And so for me, typically these lower price stocks, it's just harder to get 15, 20, 30 cent moves out of them. So I just kind of avoid them. So this morning, my main issue was that the stocks that were up were too cheap. Yes, we had some stocks that were moving. Yes, we had volume, which was better than yesterday, but it was not for me. It just wasn't my cup of tea. So I said, all right, I'm not going to trade those. I'm going to sit. I'm going to be patient. So sitting, being patient, and if we go back on the scans, let's see. I'm going to have to go back a little ways. So this is 4 a.m. Let's see. So right, YHC. This one hit the scanner at 7:30 or about 7:30. Popped up, reversed. Didn't trust it. It's a little too cheap, right? It's $2.80, $2. I just said, no, I'm not going to make enough on it. RDGT, this one popped up on the scanner, but it sold off so much yesterday. I said, nope, can't trust that one. GXAI popped up on the scanner. It's too cheap. It doesn't matter if it has news. It's just too cheap. I don't feel like I'm going to make money on it. SLXN pops up on the scanner. It's just a little too cheap. Didn't feel like I could trust it. So that was 845. TENX. This one pops up on the scanner. The price is fine, but doesn't have any volume. The headlines, they announced $25 million private placement. Now, private placements can actually work as a catalyst, but it's not the easiest one. So I left it alone. So that one I left alone. And then GV hits the scanner right here at $1.60. And at this time, I said, it's too cheap. I'm not going to trade it. But it goes from $1.30 all the way up to $2. It pulls back, and then right here was where I got in. Right there for the breakover, it was $2.27. So I'll show you where I actually broke the ice on my first trade. First trade, I jumped in this, and let's see, my first entry was right here. So right there is where I took my first trade, getting in at 225. So it pulled back here. I was watching it. I didn't trade it here because I didn't think it was worth it. And the daily 200 moving average was right around 224. So I was like, man, we're right under the 200. But as we were coming into the open and it was holding this level, I said, you know what? I think it's worth a try. So I took this trade here. I got this break from 225 to 235. That's 10 cents a share. Now, I didn't make the full 10 cents a share. I got in with 30,000 shares and I made $1,200, about $1,200, which is 4 cents. So here's the problem. We do 30,000 shares times 0.003 is $90 to buy and $90 to sell. That's $180 in fees and commissions. So, $180 in fees and commissions is on a, $1,200 winner is a little steep. That's not great. Still made $1,000, but it's not great. So anyways, it hits 235, it pulls back, and then at the open, I got back in, then it pulls back a little bit more, and then at the open, I got back in as it curls back up right here. So right there, we got another trade as it squeezed up to a high of 290, and on this one, I jumped in. So I was watching it right here, 235. I hesitated. I should have pulled the trigger, and I didn't. It pops without me. It drops back down, comes back up, and right here, when it gets over 250 and holds 250, the $0.50, I got back in, and that's where we got that nice squeeze higher. But in spite of that, I sold the position too soon. I got in at 255, and that was, let's see, it was actually, wasn't right there. Or was it right there? So it actually might have been right there that I got in. It came over 250. It looked like it was holding, and then it dipped down for just a second to 248. And I was like, uh-oh, I'm down 7 cents a share. And then immediately it popped right back up, and I was like, okay, phew. And I got back out. So it was a very close call, and then it goes, and I was like, you know what? I'm just not playing this game. I'm not taking the risk on it. It's too late in the morning, and here's the problem. If I end up taking a big loss at 9:30, knowing that I typically stop at 10 a.m., I'm not going to have time to recoup that loss. So I'm so close to the end of my trading day that it's risky to even break the ice here, and I've just got to be very defensive. Get in, get out, get in, get out, keep the stops really tight. So, I wasn't happy when I got in, and it immediately dropped. So when it came back up, I changed my bias from this could be a winner to just manage the loss. And hey, you know what? Turn it into a winner. That's great. So actually, I'm sitting here today up $1,620.80, which makes it one of my smallest green days here, possibly actually of the year. I'm not thrilled to have a small green day here. I mean, I much would prefer to have, a $20,000 day where I've hit my daily goal, which in the hot market is 20,000. But, at the same time, maintaining this green streak has been important. Focusing on consistency for me has been really important. And sometimes that means just knowing when to throw in the towel. So right now on the year, we'll just do year to date, whatever. So year to date, I'm sitting at total $933,000 in profit, getting up close to $1 million, and it's only March. Average profits, average winning trades, $1,800. Average losing trades, only $755. I'm keeping the losses tight. Accuracy, 71.6%. So I am just being really aggressive about focusing on consistency. Get in, get green, get out. If it doesn't work right away, just boom, I'm out of the trade. So today I had to play it a little bit safe. I just didn't feel like it was a day to take risk. And so although 30,000 shares is a large share position, a dollar total dollar size for me on this it's still relatively small. So I felt comfortable with that and broke the ice, got a little profit, and now, it's still holding up. So it might give more, but I just don't feel like it's worth overstaying my welcome. And at this point in the day, it's getting too late. So if I had a loss now, I really would not be able to recover it. So that's my attitude. Get in, get green, don't overstay your welcome. It's still early in the month. I'm still trying to build my cushion. I had a green day on Monday, small green day. It's a green day on Tuesday. Yesterday was nice, 21,000. And so today at 1,600, well, not making a lot of progress on the week. I had a weekly goal of $100,000 and I only have 2 days left. So I'm at 35 grand. It's not impossible. I could still hit that goal, but this is not the really strong start to the month that I had, for instance, in February. $180,000 first week of February. That was awesome. I was so far, in the lead there, sort of in the driver's seat that it just gave me such confidence going into the rest of the month. So when you start the month, certainly in the red, you're in, not a good point of confidence and not a good position. But starting the month with a small green week is also a little bit tough because it means going into next week, I'll have to continue to be a little conservative till I can build a little bit of a bigger cushion. Since my average green days this year have been, well, let's just check to see the number, 22,000. I don't want to lose more than 22,000 on a red day. I don't want to lose more than what I'm making on an average green day. But, if I lost $22,000, tomorrow or Friday, that would put me back to almost flat on the month, right? That would be a pretty big setback. So I'm not in a position right now where I can take a lot of risk. I've got to be conservative. I've got to lock up these green days, build a little bit more of a cushion. And then once I've got that, then I can start to size up. Now, I understand some of you would say, Russ, you're already up almost $1 million on the year. What are you talking about? You can afford to take risk. Well, see, I don't think about it like that. I think about these goals in like very small steps. I've got my daily goal, I've got my weekly goal, and I've got my monthly goal. And if I stay focused on these small goals, I'll look up at the end of the year and all of a sudden I'm up $3-4 million, maybe $5 million. But I can't focus on the big number and then say, oh, I'm up $1 million. I could take $200,000 of risk today. Maybe I'll make 400 grand. That I just can't think that way. So I stay focused on these just incremental goals, and that has been what's worked for me. So that's where I'm at right now. I hope you guys enjoyed this recap. And if you did, I hope you hit the thumbs up. I hope you're subscribed to the channel. And I'll remind you, as always, trading is risky. My results aren't typical, so please manage your risk, take it slow. And I'll see you guys back here. I'll be streaming bright and early tomorrow morning for all of our members at Warrior Trading. Okay, so I'll see you guys in the morning.